So you want to know how I turned 1000 rands all the way to 2,700 rand trading this simple setup? In this video I'm breaking down the exact approach I used to catch this setup right here. No hype, no guessing, just a clear strategy, patience and a solid risk management. If you've been looking for a practical way to improve your trading results, in this video I'm going to teach you exactly that. And I don't want to waste any more of your time, so let's get directly into the video. So I want to first show you how to read market structure using this simple example. Let's start from the left side of the chart. Notice how price keeps making lower highs and lower lows. This is telling us one thing, that the market is bearish. As long as price continues making lower highs and lower lows, we only expect selling. Now look here where it says change of character. This is the first warning that sellers are becoming weaker. Price breaks the previous lower high. But that doesn't mean that we have to buy immediately. It is simply telling us that the market might be getting ready to change the direction to being bullish. After the change of character, price continues moving higher. Then we get a break of structure, which means buyers are now in control. At this point, the trend has officially changed from bearish to bullish. Now that we have established the trend, I want us to talk about order block. First of all, what is an order block? Looking at the specific scenario. An order block is simply the last bearish candle before the strong bullish move. I want you to think of it as the place where the big institutions place buy orders. Instead of chasing price after it has already moved, professional traders will wait for the price to return to this area. Notice what happens. Price just doesn't keep going up. It comes back into the order block. Why? Because the market is looking for more buyers. This is where many institutions enter their position. Once enough buying pressure enters the market, price will continue higher. Before we can even go down to the lower time frame, there is one concept that you need to understand, and it's called inducement. Now, what is an inducement in the first place? An inducement, in simple words, is when the market tricks traders into taking the wrong trade before moving in the real direction. I want you to think of it like the market creating a fake opportunity just so it can collect liquidity. Now let's look at this two example. This one on the left, the market is bullish at this point, and then the market pulls back. Then it suddenly drops below the previous low. Most traders will panic at this point. They think the market is bearish, so they start selling. At the same time, traders who are buying have their stop losses taken out. This is exactly what smart money wants. Once enough liquidity has been collected, price immediately reverses and continues moving higher. Now let's look at this other example on the right. The market is bearish at this point. Price starts moving sideways and slowly pushes above the recent highs. Many traders will believe at this point that this is a breakout and they start placing buys. They think the market is going higher. But the breakout is actually an inducement. And you will only see that in hindsight. Now the market grabs their liquidity and then it sells off so aggressive. That's why you should never chase breakouts without confirmation. So now that we have established what an inducement is, I want us to go to the 15-minute time frame, and then we will furthermore go to the 1-minute time frame where we will be looking for entry confirmation. And then I will wrap everything that I have taught you here and apply in the real life chart. Now let's apply this concept to our setup. Remember the 4-hour demand zone we marked earlier. This is where we expect buyers to step into the markets. Now we drop down to the 15-minute time frame, and I want you to notice how price enters this demand zone. Instead of immediately reversing, it starts moving sideways and creates a lot of small swings. This is nothing rather than an inducement. The market is encouraging traders to enter too early. Some traders buy every small bullish candles because they take every reaction as confirmation. They make up reasons to enter. But in reality, that is only just inducement. The market is still bearish. Others place their stop losses below recent lows. The market sees all those stop losses. Then it makes one final push lower into the demand. That move is not random. It's collecting liquidity before the real move can begin. And once enough liquidity has been collected, the market rallies strongly from the demand zone. So now it's time for us to drop down to the 1-minute time frame. Now this is where we're going to be looking for our entry to enter our buy position. Instead of taking a buying position on the 15-minute time frame, we go down to the 1-minute time frame because this will give us a precise entry and our stop loss is going to be very small. Now watch what happens here. Price sweeps below the previous low. This is the inducement that we talked about earlier. Everyone is selling the breakout, everyone stop losses. All of that liquidity gets taken out. Then the market quickly rejects that area and start pushing higher. Now we wait for one thing, a break of most recent lower high. That break will tell us that buyers are taking control. Once the structure is broken, we will wait for a small pullback into new bullish order block or demand area. That's where we will look for our buy entry. Our stop loss will go below the inducement low, and our target will be the next higher time frame, high or supply zone. Now all this information is my entire strategy, and I just revealed it to you. And that's exactly how you take a buy. Now I want to wrap all this video up by applying everything else that I have told you in the real life charts so that you guys can get an understanding of the picture that I'm trying to paint here. Alright guys, so we're now looking at gold on the live charts and I want to explain exactly what I just told you in the diagram. Right now, what is gold doing? We see lower highs, see lower lows, we see lower high, we see a lower low. What this is telling us is one thing, that we are bearish, okay? Right here, we don't have any change of characters. We only have break of structures right here, okay? So since that is the case, it means we are bearish, okay? We don't need to stress this thing any further. The second thing I talked about is you have to mark your order blocks. Now there are only 2 order blocks that I mainly use and that I believe are the ones that are highly probability. Those order blocks are extreme order block and a decisional order block. But in this case, we're going to use the extreme order block. I explained why this order block is the best one in my previous video. If you don't understand why I'm choosing this order block, go and watch my previous video. But however, anyways, this is where the institutions are going to be placing their sell orders. So we're trading with the institutions, right? So even us, we're going to be waiting for the market to retrace into this order block so that we can look to create a lower low. Okay, so now that I have marked out my order blocks, it's time for me to move to the 15-minute time frame. And right now here is how the 15-minute time frame looks like. It's a little bit magnified. You can see the details even more refined. What do we see here? We see the bearish trend forming here, and then we see this change of character. This is that pullback into that supply zone. There's a couple of things that you need to look out when you get to the 15-minute time frame. I talked about inducements, okay? So I want you to focus on the inducements that supports this trend. So we are looking at this trend right now. You want to be able to spot those inducements. What you can see here is this mini inducement that happened here and this mini one that happened here. It's not a lot of them, but they are important because they tell us where the 15-minute time frame is going. That's the purpose of the inducement. They only explain where price is going. As long as you see inducements that are pushing price higher, just know exactly that you are bullish, okay? And when you see the inducement that are pushing price lower, you just have to understand that you are bearish as well. Now, on the 15-minute time frame, what we mainly look at is inducement. You want to observe price, what it does when it arrives to that supply zone that I talked about. As you can see, we see this mini inducement here forming. What you want to focus on once price gets here is price changing character, changing direction from bullish to bearish. In this case, what you will be waiting for is a market structure shift right on this inducement right here. And in this case, we already have that market structure shift. Price has engulfed this inducement that had formed. And once you see that, the only thing that you want to do is to drop down to the 1 minute time frame. Now, there is something that you look for on the 1 minute time frame. You look for an inducement. And as you can see here, we have this inducement that had formed. On that diagram, I talked about entering on a pullback. Once you see this inducement, you're gonna sell off. But here is the thing. Most of the time, I've witnessed this happening so many times that it's unavoidable anymore. Price, most of the time, it will come and engulf this inducement right here, and it will give you a market structure shift and then give you a sell. Now, that's exactly what you want to avoid right now. I want to scroll down to show you what I'm talking about. Look at this right here. This is that inducement that we spotted just right now. And what I told you to do once you see something like this, you should wait for the market to retrace to some supply zone or some level, 50% area where you will be looking to take your entry. And this is exactly what I told you to do. I told you to sell just right here. I want you to scratch what I just said in those diagrams a little bit, actually, not really, but a little bit, because I've witnessed price giving me a little bit of a reaction and then taking me out and then moving in that direction that I predicted. What you want to see is the market taking out this level first. Once you see that, you can enter for yourself right here, because that is what price is going to do. It's going to feed you. It's going to give you this little reaction right here, and you will be in a little bit of profits, but then it will reverse and take you out. So we want to avoid that, okay? You want price to take out this inducement first. Once you see that, you will sell. Anyways, I want to show you the screen recording on how price played out, okay? And then, yeah, anyways, this is the end of the video, by the way. Let's go.